Hello everyone, my name is Jane and on behalf of the Colorado Department of Revenue, welcome to the 2024 Legislative Updates webinar recording. I will be your host for today's recording and I look forward to helping you learn more about the most recent legislative updates pertaining to sales tax, income tax, and other business-related taxes and fees. This webinar recording will last approximately 1 hour. In today's video, we'll cover the 17 tax bills that have relevant changes for the current or upcoming tax years. These include House Bill 24-1041, Streamline Filing Sales and Use Tax Returns, House Bill 24-1349, Firearms and Ammunition Excise Tax, Senate Bill 24-230, Oil and Gas Production Fees, Senate Bill 24-184, Support Surface Transportation Infrastructure Development, House Bill 23-1272, Tax Policy that Advances Decarbonization, House Bill 24-1050, Simplify Process for Local Government Taxes, House Bill 24-1234, Sunset Review of High Cost Support Mechanism, House Bill 24-1311, Family Affordability Tax Credit, House Bill 23-1008, Food Accessibility, Senate Bill 23-290, Natural Medicine Regulation and Legalization, Senate Bill 24-228, Tabor Refund Mechanisms, House Bill 23-1277, Reporting Adjustments to Taxable Income, House Bill 23-1189, Employer Assistance for Home Purchase Tax Credit, House Bill 24-1052, Senior Housing Income Tax Credit, House Bill 24-1434, Expand Affordable Housing Tax Credit, House Bill 24-1036, Adjusting Certain Tax Expenditures, and last but not least, House Bill 23-1260, Advanced Industry and Semiconductor Manufacturing Incentives. While today's presentation covers the highlights of changes for income tax year 2024 and other tax and fee changes taking effect in 2024 and 2025, please refer to the statutes and session laws for full details of all changes made by recent legislation. Our motto is to always help, and our mission is to promote voluntary compliance with tax laws through education, assistance, and customer service. We have a variety of resources available to you if you ever have questions. We have our websites, the Taxpayer Helpline and SUTS Support Helpline. You can schedule an appointment with a tax examiner at one of our local offices. We also have the department's FYIs and guidance publications and our taxpayer email. The department's main website is Tax.Colorado.gov. From our website, you can find information for businesses, individuals, tax professionals, forms, and the latest news. Revenue Online is an administration portal that you can use to make payments, file returns, add non-physical locations to your account, submit power of attorney documents, and more. You can also schedule an appointment with a tax examiner by going to Revenue Online and scrolling down to the Appointments section. If a phone call is preferred, you can schedule one ahead of time by visiting Tax.Colorado.gov and selecting Contact Us. Now let's get to the heart of the matter and dig into this year's legislative updates. We've got lots of great information to share with you today, and we'll begin by looking at sales, excise, and lodging tax updates. First is House Bill 24-1041, Streamline Filing Sales and Use Tax Returns. This bill makes changes to sales tax filing frequencies. As a reminder, sales tax filing frequency is determined by the amount of sales tax collected monthly. Let's take a look at the current filing frequencies. If you collect $15 or less per month, your filing frequency is annually. If you collect under $300 per month, your filing frequency is quarterly. And if you collect $300 or more per month, your filing frequency is monthly. Beginning January 1st, 2025, this bill changes some threshold amounts for sales tax filing frequencies. So, if you collect $15 or less per month, your filing frequency remains annually. If you collect under $600 per month, your filing frequency is now quarterly. And if you collect $600 or more per month, you must file monthly. As a reminder, the department will, on an annual basis, adjust a retailer's filing frequency to increase their required filing frequency if necessary. If a retailer believes that their filing frequency should be adjusted to less frequent, they will need to contact our Taxpayer Services team using a method that works best for them. Now we'll discuss House Bill 24-1349, Firearms and Ammunition Excise Tax. This bill was voted on in the November election and passed. Let's take a look at what changes are associated with this bill. If you are a retailer that sells ammunition, firearms, guns, or fire control components, an excise tax will apply to these goods beginning April 1st, 2025. The tax is equal to 6.5% of the monthly net taxable sales from the retail sales in the state of Colorado. You will need to fill out a new form, DR 0556, Firearm and Ammunition Tax Return, in addition to your DR 0100, Retail Sales Tax Return. Vendor sales to active duty military members, peace officers, and law enforcement agencies are exempt. Vendors without a physical presence in the state of Colorado and that make $20,000 or less in retail sales in the previous calendar year are also not required to pay the tax unless and until the vendor's retail sales exceed $20,000 in a calendar year. Registration is required using Form CR 0100, Colorado Sales Tax and Withholding Account application. Vendors will be required to file and pay this tax electronically, and vendor registration must be renewed on or before January 1st of each even-numbered year. Now we'll cover Senate Bill 24-230, Oil and Gas Production Fees. Senate Bill 24-230 creates a new production fee for oil and gas producers. This fee begins July 1st, 2025, is calculated in October 2025, and returns are due by November 30th for the July through September period. Oil and gas producers are required to register with the Department of Revenue and remit taxes to the department using Form DR 1787 oil and gas production fee return. This fee must be filed and paid electronically. Now let's take a look at updates regarding Senate Bill 24-184, Support Surface Transportation Infrastructure. This bill created a new congestion impact fee, which impacts retailers who file the Form DR 1777 Daily Vehicle Rental Fee Return. Form DR 1777 has been renamed and is now the Motor Vehicle Daily Rental Return. If you currently file this form, you will need to include the new congestion impact fee as part of your fee collection and remittance to the department. The new fee has been set at $3 a day for January 2025 through June 2025 and applies to short-term vehicle rentals of 30 days or less. Although the new congestion impact fee is separate from the daily vehicle rental fee, both fees will be combined on your return. Both fees increase with inflation each July 1st. Now we'll discuss House Bill 23-1272, tax policy that advances decarbonization. House Bill 23-1272 creates several new credits, including the Sustainable Aviation Fuel Production Credit, Geothermal Electricity Production Credit, Geothermal Energy Expenditure Credit, and the Industrial Clean Energy Credit. All credits listed here will be claimed on the same line along with the Clean Hydrogen Tax Credit added to Section 39-22-557 by House Bill 23-1281. If individual data is needed for reporting purposes, the Colorado Energy Office can provide that since they will issue the credit certificate for each credit separately. Please note that all of these new credits are issued by the Colorado Energy Office, not the Department of Revenue. You will need to contact the Colorado Energy Office directly for information on the certification process. In general, an application must be submitted before starting a project in order to reserve credits. In other words, taxpayers will need to receive a credit certificate from the Colorado Energy Office and submit that certificate with their return in order to claim the credit. Now, let's take a closer look at the Sustainable Aviation Fuel Production Credit. As a reminder, you can visit our climate-friendly tax incentives webpage, which contains helpful information for 12 different credits. This webpage also contains helpful links to the Colorado Energy Office's website, where you can sign up for helpful updates regarding these tax credits. The Sustainable Aviation Fuel Production Credit equals 30% of the cost paid to construct, reconstruct, or erect a facility for construction beginning January 1st, 2024 through January 1st, 2027. This credit is also allowed for construction that begins after January 1st, 2027 through 2033. And just like the plane is moving away from us and will decrease in size over time, the credit percentages will also decrease over time. Sustainable aviation fuels are subject to recapture if they do not complete the requirements for the credit. Now let's take a look at the Innovative Motor Vehicle Credit. The qualifying criteria for the Innovative Motor Vehicle Credit and Innovative Truck Credit are mostly the same and distinguished primarily by gross vehicle weight rating. If the vehicle has a gross vehicle weight rating, GVWR, of 8,500 pounds or less, it will qualify for the Innovative Motor Vehicle Credit. If the vehicle has a gross vehicle weight rating over 8,500 pounds, it will qualify for the Innovative Truck Credit. Motor vehicle dealers were able to start accepting assignments in 2024, and advance payments can begin in 2025. Motor vehicle dealers and financing entities that accept advance payment of these credits can request payment of refunds on a quarterly basis. Dealerships must file a quarterly report electronically to the Department of Revenue using a spreadsheet which can be found next to Form DR0618, Innovative Motor Vehicle Tax Credit Election Statement. Both documents can be found on the Forms webpage on Tax.Colorado.gov. Let's look at the details. The $5,000 credit for Category 1 vehicles in 2024 will decrease to $3,500 beginning in 2025. There is an additional $600 for assigning the credit to the dealer or financing entity allowed for qualifying motor vehicles purchased or leased in 2024 or 2025. An additional $2,500 for a vehicle with a manufacturer's suggested retail price, MSRP, below $35,000 is allowed for qualifying motor vehicles purchased or leased in 2024 or 2025. This additional credit is not allowed with respect to the Innovative Truck Credit. There is a $5,000 credit for Category 7 light-duty passenger vehicles with a gross vehicle weight rating of 8,500 pounds or light-duty electric trucks for 2024. This credit will decrease to $3,500 beginning in 2025. The credit is $12,000 for medium and heavy-duty trucks for tax years 2024 and 2025. Some consumer electric pickup trucks will qualify for this credit. For example, the Hummer has a gross vehicle weight rating, GVWR, over 10,000 pounds, which will actually qualify it for a $12,000 credit as a medium-duty truck. We've talked a lot about automobiles and trucks, but don't worry, we've got a credit for e-bike enthusiasts as well. Earlier this year, the Department of Revenue hosted a webinar on the e-bike tax credit for retailers. We encourage you to view that recording on our YouTube channel for a deeper dive on the topic. We'll roll through some highlights of that credit now. House Bill 23-1272 created a new e-bike credit which began in 2024 with an option for advance payment for retailers beginning in 2025. Retailers must allow a discount to the purchaser and will claim the credit on Form DR0619, Assigned Innovative Motor Vehicle and Truck Credits and Electric Bicycle Credit Reconciliation Schedule. Purchasers should expect to see a discounted price from participating retailers that have claimed the credit. Retailers may request quarterly advance payments of this tax credit to supplement their revenue loss when selling electric bicycles at a reduced price. The due date for quarterly reports coincides with the qualified retailer's due dates for estimated tax payments. A retailer must be a qualified retailer by satisfying the following criteria. They must make retail sales of qualified electric bicycles. They must hold a current Colorado sales tax license. They must timely file monthly Colorado sales tax returns showing a tax liability for at least 12 months. They must have timely paid the taxes due on the monthly Colorado sales tax return, and they must register with the department via Revenue Online. Let's look at some registration details now. To qualify for the credit, sales must be made to a qualified purchaser. So what does that mean? A qualified purchaser is a Colorado resident who has not previously purchased a qualified electric bicycle that was discounted by a qualified retailer during the same calendar year. To easily verify that the purchaser is a qualified purchaser, qualified retailers must collect from purchasers either a signed and completed Form DR-0514, qualified purchaser of an electric bicycle affidavit from the purchaser, or the information included on Form DR-0514, which they then enter into a DR-0514 Excel spreadsheet. The retailer must review the documentation according to the instructions on the DR-0514. All qualified retailers must file required quarterly reports and an annual Colorado income tax return to claim the credit for all retail sales of new qualifying electric bicycles sold in Colorado during their tax year. For income tax years beginning on or after January 1st, 2025, a qualified retailer will receive payment of the income tax credit after they file their Colorado income tax return. Any credit that exceeds the income tax liability for the tax year will be refunded to the qualified retailer, or a qualified retailer may elect to receive 4 advance payments of the credit each tax year. Qualified retailers must make this election when filing their required quarterly reports and must specify how much of the advance payment for which they are eligible they would like to claim. The hope is that because the reporting schedule and schedule for requesting quarterly advance payments aligns with the due dates for estimated payments, retailers will offset their estimated payments and advance payments against each other. Now that's a tax mouthful, so let's look at some examples of how this works in real life. For that, I'm going to need my blackboard. For example, if a retailer earns $20,000 in credit in the first quarter and owes an estimated payment of $12,000, the retailer may elect to remit no estimated payment and request only $8,000 as an advance payment. The remaining $12,000 of credit will be available for the retailer to claim and apply toward their tax liability on their return. Please note that this is a suggestion that retailers are not required to follow. You may remit an estimated payment for $12,000 and request advance payment for $20,000 if that is what you prefer. If the situation were reversed and a retailer earns $80,000 in credit in the first quarter and their required estimated payment was $100,000, then the retailer could elect to request no advance payment and remit an estimated payment of only $20,000. The $80,000 credit will be available for the retailer to claim and apply toward their tax liability on their return. Again, this is a suggestion that retailers are not required to follow. Now let's look at House Bill 24-1050, Simplify Process for Local Government Taxes. Local jurisdictions that impose a local lodging tax or applicable sales or use tax must file a copy of the resolution or ordinance and any amendments to these taxes to the Department of Revenue. So, if you are a local jurisdiction that imposes a lodging tax, you must begin reporting this information prior to June 15, 2025. We'll conclude this section with House Bill 24-1234, Sunset Review of High Cost Support Mechanism. House Bill 24-1234 sunsets the review and report on the high-cost support mechanism established by the Public Utilities Commission. This means that the high-cost support mechanism will continue indefinitely, and modifications will occur to the computation of fees for the Public Utilities Commission Fixed Utility Fund and Telecommunications Utility Fund. We've covered all of the significant sales, excise, and lodging bills associated with this upcoming tax year. Now we'll switch gears and take a closer look at income tax bills. First, we'll discuss House Bill 24-1311, Family Affordability Tax Credit. This bill creates the new Family Affordability Tax Credit. For income-qualified taxpayers, this credit is available with a qualifying child age 16 or younger and can be stacked with the Colorado Child Tax Credit where applicable. If your federal adjusted gross income, AGI, is $15,000 or less, or you jointly file with an AGI of $25,000 or less, you are eligible for a tax credit of up to $3,200 per qualifying child, age 5 or younger, and $2,400 per qualifying child, age 6 to 16. These per-child credit amounts are reduced for those with adjusted gross incomes above these thresholds. The credit is fully phased out above $85,000 AGI for single filers or $95,000 for joint filers. Credit tables for each AGI range will be included with the instructions for Form DR0104CN, Colorado Child Tax Credit. This is really important, so I'd like to take a moment to pause and review this information. The Colorado Department of Revenue is consolidating dependent information into one place. The calculation for the new Family Affordability Tax Credit is being added to Form DR0104CN, which was used previously to claim only the Colorado Child Tax Credit. Please pay close attention to form changes this year so you can get credits that you qualify for as quickly as possible. The new Family Affordability Tax Credit is now calculated on the DR0104CN, which is the same form used to previously calculate the Colorado Child Tax Credit. This new credit is claimed on DR0104, Colorado Individual Income Tax Return. Here's an important note. Submit DR0104CN with your return. The most common reason why people are denied this credit is because they forgot to submit the correct form. We don't want this to happen to you, so please be sure to submit the DR0104CN with your return. It might help to think of the Family Affordability Credit as an expansion of the existing Child Tax Credit, because that is sort of how it is framed on the form. The existing Child Tax Credit form, DR0104CN, has been adapted to also include the Family Affordability Credit. As the two credits have enough similarities and differences to be confusing, we thought it might help for you to see them side by side for a better understanding. The Child Tax Credit is for income tax year 2022 and later, while the Family Affordability Tax Credit is for 2024. Its availability for additional years will be contingent on state revenues. Both credits are allowed only to taxpayers whose adjusted gross income is below the applicable threshold, but the thresholds are different for the two credits. The AGI limit for the Child Tax Credit is $75,000 for a single filer and $85,000 for joint filers. For the Family Affordability Tax Credit, the AGI limit is $85,000 or less for a single filer and $95,000 or less for joint filers. Regarding age limits, the child tax credit is allowed only for children under 6, while the Family Affordability Credit is for children under age 17. Both credits phase out as the taxpayer's AGI increases, but at different rates and intervals. Also, as noted on a previous slide, the amount of the Family Affordability Credit is different for children aged 6 to 16, $2,400, than for children aged 5 and under, $3,200. Now let's take a look at Senate Bill 23-016, Greenhouse Gas Emission Reduction Measures. You may remember this bill from last year, since it went into effect in 2024. This bill created a refundable income tax credit for qualified retailers of electric-powered lawn equipment. The purpose of this bill is to incentivize the purchase and use of electric lawn equipment to replace comparable gas-powered equipment and reduce greenhouse gas emissions. As a reminder, this credit is available for tax years 2024, 2025, and 2026. Lawn equipment dealers will not be eligible for advance payments in 2025. Next up is House Bill 23-1008, Food Accessibility. House Bill 23-1008 creates a new add-back for business meals deduction, and here's how it applies. If you are an individual or corporation and you have claimed the business meals deduction on your federal tax return, you will now be required to add this amount to your net state income. The additional tax collected from this add-back will be used to fund food accessibility programs. Let's take a look at those programs now. The tax credit for items not covered by the Community Food Consortium is certified by the Department of Agriculture. This is for members of the Community Food Consortium for small food retailers and Colorado-owned and Colorado-operated farms. The credit is a percentage of the amount spent on certain items and fees. For tax year 2024, the tax credit can be 85% of the amount spent, and 75% for tax years 2025 through 2030. This bill also allows the Department of Agriculture to certify grants for the Small Food Business Recovery and Resilience Grant Program. This is for small food retailers or small family farms, and allows them to purchase Small Food Business Recovery and Resilience Grant Program equipment. The credit is a percentage of the amount actually paid by the purchaser for qualifying equipment and is 85% of the difference between what the grant covered and the actual purchase price of the qualifying equipment for tax year 2024, and 75% for tax years 2025 through 2030. You've probably heard a lot about this next bill when it passed in 2023, and it will impact income taxes for some businesses for tax year 2024. So let's look briefly at Senate Bill 23-290, Natural Medicine Regulation and Legalization. This bill amends the regulatory framework for natural medicine and natural medicine products in Colorado. Natural medicine under this act includes psilocybin, psilocin, dimethyltryptamine, ibogaine, and mescaline. The two items with asterisks, dimethyltryptamine and mescaline, will be legalized if approved on or after June 1st, 2026. Similar to the Colorado Marijuana Code, this bill creates the process for Colorado Natural Medicine Code. Taxpayers who are licensed under the Colorado Natural Medicine Code can subtract expenses that are disallowed under Section 280E of the Internal Revenue Code on their state income tax. This subtraction applies to tax years beginning on or after January 1st, 2024. This subtraction will be included on income tax forms on the same line as the Colorado marijuana business deduction. Next, we'll discuss Senate Bill 24-228, TABOR Refund Mechanisms. Senate Bill 24-228 created new refund mechanisms and made changes to how the state refunds TABOR surplus revenue to taxpayers. The Department of Revenue is responsible for administering the new refund mechanisms and changes in the bill. What this means for TABOR refunds during the 2025 tax filing season is: the first refund mechanism is to fund senior and veteran property tax exemptions. This bill established the second mechanism as a temporary reduction in state income tax rate. The state income tax rate is reduced to 4.25% for income tax year 2024 only, and future income tax rate reductions may occur depending on the amount of the surplus. After the state income tax reduction, remaining excess revenue will be refunded in the familiar 6-tier state sales tax refund. If you're not familiar, this mechanism grants taxpayers a refund according to where their adjusted gross income, AGI, falls among 6 tiers. Lastly, the deadlines for claiming the 6-tier state sales tax refund were amended by this bill. All qualified individuals may now claim the refund on a return filed on or before the October 15th extension deadline. Now we'll take a look at changes made by House Bill 23-1277, Reporting Adjustments to Taxable Income. You may remember this bill from last year, and we would like to review it since 2024 is the first tax year it applies to. For partnerships and S corporations, pass-through entities, the withholding payment made on Form DR-0108, Statement of Colorado Tax Remittance for Non-Resident Partner or Shareholder, has been eliminated. Instead, all non-resident partners and shareholders will be required to be included in a composite return unless they opt out by filing Form DR-0107, Non-Resident Partner or Shareholder Agreement. House Bill 23-1277 also impacts filing due dates, so let's take a look at those now. For C corporations, the due date for tax years beginning on and after January 1st, 2024, is changed to the 15th day of the 5th month after the close of the taxable year. For calendar year filers, this changes the due date from April 15th to May 15th, restoring the 1-month lag between federal and state filing deadlines. The Colorado extension deadline is also pushed back 1 month. Next, we'll cover House Bill 23-1189, Employer Assistance for Home Purchase Tax Credit. House Bill 23-1189 creates a credit that employers may claim for contributions they make to their employees' qualifying home savings accounts. An employer who establishes savings accounts for employees to use to pay eligible expenses in connection with a qualifying home purchase is eligible for 5% of the amount contributed. The employer may not claim more than $5,000 per employee, and not more than $500,000 in total per tax year. If an employee leaves or uses the money for an ineligible expense, the employer must pay the employee any employee contributions and repay the credit as a recaptured credit. Any credit in excess of the employer's tax liability may be carried forward for up to 5 tax years. Since there is considerable nuance with this tax credit, employers may consult with a CPA or tax advisor to determine how to calculate this credit as income. Eligibility and tax treatment will depend on specific situations, so employers may request a private letter ruling for specific guidance from the department on this credit. Now we'll cover House Bill 24-1052, Senior Housing Income Tax Credit. This bill reinstates the income tax credit that was available for income tax year 2022. Similar to tax year 2022, you'll qualify for this credit if you are 65 years of age or older at the end of 2024, have a federal adjusted gross income, AGI, less than or equal to $75,000 for a single filer, or less than or equal to $125,000 if filing a joint return, and did not claim the partial senior property exemption for the 2024 property tax year. One of the most common errors made in 2022 was that taxpayers claimed this credit even though they also claimed the partial senior property tax exemption for the same year. Taxpayers made this error for 2 common reasons. First, the senior property tax exemption is only a partial exemption. Some people did not realize that they received the exemption because they still had a property tax liability. Second, once an application for the senior property tax exemption is approved, it remains effective for future property tax years. Some people forgot that they applied for the exemption several years ago. The credit amount is $800 for a qualifying senior filing a single return with a federal adjusted gross income, AGI, less than or equal to $25,000. For every $500 of AGI above $25,000, the credit amount is reduced by $8. What if you have 2 taxpayers filing returns? Let's take a look. In the case of 2 taxpayers who share the same primary residence and who may legally file a joint return but file separate returns, the credit amount is $400 if both taxpayers claim the credit. The AGI must still be less than or equal to $25,000, and for every $500 of AGI above $25,000, the credit amount is reduced by $4. The credit amount is $800 for 2 taxpayers filing a joint return. The federal AGI must be less than or equal to $25,000. For every $500 of AGI above $25,000, the credit amount is reduced by $4. A taxpayer who also qualifies for a property tax and rent assistance grant or heat assistance grant during calendar year 2024 is eligible to receive the full credit amount. Let's take a look at how residency status impacts the credit amount you'll receive. One thing worth noting is that this version of the bill or credit program apportions the amount of credit available if you were a part-year resident of Colorado versus a full-year resident. Before, the 2022 version of the credit was not subject to an apportionment factor, so both full-year and part-year residents received the same credit amount. Now, part-time residents will calculate their full-year amount and then multiply it by the apportionment percentage from their DR0104PN. Part-year resident, non-resident tax calculation schedule. Now we'll discuss House Bill 24-1434, Expand Affordable Housing Tax Credit. Beginning with income tax year 2024, this bill allocates additional funding for the credit during calendar years 2024 through 2031. Any credits awarded from this additional funding pool use an accelerated allocation schedule, which allows the taxpayer to use 70% of the total allocated credit during the first year and 6% after, until your total allocated amount has been redeemed. This redemption schedule is allowed on top of the existing one for this credit, but only if the Colorado Housing and Finance Authority, CHFA, awards the credit out of the new funding source. Beginning in tax year 2025, developers can receive an income tax credit for building affordable housing development in a transit-oriented community. You will need to obtain certification from the Colorado Housing and Finance Authority, CHFA. This credit is also claimed at 70% during the first year, then 8% for years 2 and 3, and 7% for years 4 and 5. This credit is subject to recapture should the qualified development no longer meet compliance requirements. Now let's take a look at House Bill 24-1036, Adjusting Certain Tax Expenditures. Beginning January 1st, 2025, House Bill 24-1036 repeals 13 infrequently used tax expenditures. We'll highlight important upcoming changes, and we encourage you to review this bill in its entirety for any expenditures that may directly impact you. Line 5 of Schedule B for the DR0100 Retail Sales Tax Return was previously used to enter sales of medium and heavy-duty low-emitting vehicles and associated parts and power sources. This line will be eliminated on Schedule B beginning January 1st, 2025. One important item that has been repealed is the cigarette and tobacco bad debt tax credit for cigarette and tobacco wholesalers, distributors, and retailers. Our final bill for today is House Bill 23-1260, Advanced Industry and Semiconductor Manufacturing Incentives. House Bill 23-1260 establishes tax incentives for manufacturing semiconductor products in Colorado, best aligning with the federal CHIPS Act. This bill also allows the Economic Development Commission to create new CHIPS zones. Businesses in these zones are eligible for certain credits allowed to businesses in state enterprise zones. The credits are used to offset tax liability, can be carried forward, or claimed as a refund for up to 80% of the total amount of credits issued to the taxpayer. Please note that this credit is issued by the Office of Economic Development. View their webpage for more information about this credit. House Bill 23-1260 also makes several changes to the following forms: DR 0104, Colorado Individual Income Tax Return; DR 0105, Fiduciary Income Tax Return; DR 0106CR, Colorado Pass-Through Entity Credit Schedule; and DR 0112, C Corporation Income Tax Return. A new form, the DR 1370, Certified Economic Development Credit Schedule for taxpayers with a refund certificate, will be released for tax year 2024 for entities that receive a refundability certificate from the Office of Economic Development and International Trade. Other businesses operating in CHIPS zones will report credits on Form DR 1366, Certified Economic Development Credit Schedule. Please keep an eye out for these form updates, and remember that the most current version of all of our forms can be found on Tax.Colorado.gov. Please remember that there are a wide variety of resources and tools available to help you be voluntarily tax compliant. We have our websites, the Taxpayer Helpline and SUTS Support Helpline. You can schedule an appointment with a tax examiner at one of our local offices. We also have the department's FYIs and guidance publications and our taxpayer email. We also hope that you will connect with us on social media. You can find us in any of these places for the most up-to-date tax information. Again, my name is Jane, and on behalf of the Colorado Department of Revenue, thank you for watching this webinar recording. It was my pleasure to serve you. Have a great day. This presentation is intended to provide general information concerning Colorado tax topics in simple and straightforward language. Although we have done our best to provide accurate and complete tax information, this information is not binding on the Department of Revenue, nor does it replace, alter, or supersede Colorado tax law and regulations. We recommend consulting with a tax professional for your specific tax situation.